I'm John Janarone, Editor-in-Chief of IPO Edge, here live at the New York Stock Exchange. We have a really exciting guest who's about to join us. Her name is Sherry Major. She is Deal Advisory Partner and National Capital Markets Readiness Leader at KPMG, and we're going to talk about IPOs. Sherry, thanks for joining us.
Thank you very much for having me. I appreciate it.
Great. So Sherry, tell us a bit more about the services you provide to clients in your role at KPMG.
Yeah, absolutely. So as you mentioned, I'm our National Capital Markets Readiness Leader here in the US, and so we help companies get ready for the IPO, starting roughly about 2 years before on that journey if they're really thoughtful about it. And KPMG brings a great breadth of services to the table, so we could be helping companies with getting ready for a financial statement audit, getting their taxes in order, perhaps doing the audit, thinking about a system implementation. So really the breadth of services that we offer are quite comprehensive, but it's about helping the company get ready for life as a public company and really thinking about how do they make that sustainable, how do we help them be successful, and educate them along the way.
Great. I want to talk more about that timeline later. That's interesting. So 2 years in advance. So even though things look a little slow right now, we're about to get to that, that doesn't mean companies are not thinking about the steps they need to take, right?
That's right, absolutely. And now is the time to think about it because they have time to get ready in a thoughtful manner. Even though we know there's not a frenzy happening right now, it will pick up again, and so being ready is extremely important.
That's interesting because you have to imagine that during the frenzy, if I can call it that, a couple of years ago, some of those companies went public very quickly and perhaps didn't take all those steps in advance that you would recommend, right?
Yeah, absolutely. I mean, some maybe had already been on the journey, but I know a lot, especially with as SPACs were looking for more and more companies. Some that hadn't maybe thought of being public decided that this might be good for them, and so it was a pretty crazy time. Most focused on the actual act of going public and then left the readiness of being public to a little bit later down the road, which can sometimes be challenging.
Well, we've seen a lot of that. Well, all right, well, let's talk about what's happening right now. So we all, as we were just alluding to, the IPO market went from feast to famine last year. Yeah. What kind of activity have you seen in the first quarter? Have you seen any signs of life?
Yeah, I mean, first quarter was still pretty quiet, very consistent with what we were seeing in 2022. I think it's been a pretty small number of IPOs, if I'm remembering around, in the 30s, about $2 billion raised. So certainly, not what we were seeing in 21, and definitely looking for an uptick in volume. I think, we'll see a little bit of this continue, probably Q2, Q3. I'm hopeful that as things start to stabilize in the economy, that we'll see, that pickup start again towards the latter half of the year and into early 2024.
So there have been some deals, and they're probably in the small side. Just tell us a little bit more about what they look like. Are they in any particular sectors, or because there has been some volume, right? It's not totally zero.
Yeah, absolutely. I mean, we are still seeing some consistent volume from a technology perspective, which is typically one of the strongest sectors we always see. And really, energy has had a boom here in the first quarter, which has been good to see. So those would probably be the two predominant sectors that are active right now.
Okay, great. So now this is the big question everyone has. What's it going to take for the window to reopen? Is it interest rate stability, economic stability? Which of these things are most important, or is it all the above?
It's really all of the above. I think definitely, having inflation stabilize, come down, interest rates stop rising, definitely. Some economic stability is what companies are looking for. They're still in a wait and see mode, and it's really going to take a number of those factors to all come together for things to start to open up. And then really, I think the other piece of it is around valuations. There's still a gap between what companies are hoping for and what investors are considering, and so we need that gap to narrow for companies to be willing to take the next step.
Gotcha, that's interesting. And then of course, I mean, the market stability is important too, right? So I mean, an elevated VIX is toxic for IPOs, right?
Absolutely, yeah, that volatility scares everyone away. So, we like to see that come down under 20 from a VIX metric perspective, and we're still probably around the mid-20s right now.
Great. So let's talk about SPACs, which is certainly a four-letter word these days. It's funny because it used to be, and then for a couple of years there, they came back into vogue, and I had people telling me that this is institutionalized now. It's going to replace IPOs. What's the reality here? Do we need to get some of these expirations to happen and kind of clean up this oversupply of SPACs and sort of normalize?
Yeah, definitely. I mean, you talk about the expiries. We were anticipating a number of expiries in the first quarter, but really what happened is a lot of them accelerated that into the end of 22 to take advantage of some favorable tax rules. And then a number of them also extended, so out, 6-9 months. So there's still some of that that's going to make its way through the system in 2023. So we are still seeing volume. I mean, the SPACs are out there looking for targets. I don't think we're going to see the heyday of 21 come back anytime soon, but I also don't think SPACs are going away. And it's just one other avenue for companies to take as they think about how to go public and what way they want to do that.
When, Sherry, does a SPAC actually make sense? I mean, my feeling about this, having interviewed dozens and dozens of them, is that if you've got a sponsor that actually has some synergies with the target and can actually offer advice and steer the business, in those cases it could make sense, right? But we saw a lot of deals where there was nothing in the kind, right?
Yeah, definitely. The synergies are extremely important. Where I've seen them be very successful is where there's been a relationship between the SPAC and the sponsor and then the target, where they're very motivated to work together. And it also provides, some visibility into negotiating, right?
Yeah.
And so there are situations where those synergies and that familiarity does make sense for a company that's ready. I think we want to, stay away from the companies that are just sort of going after it and trying to see if it sticks. That hopefully is behind us.
So let's get down into some of the steps you actually advise your clients take as they prepare to go public. I mean, as we were talking about before, some of these companies that may have moved too quickly, I don't think they were expecting to get the backlash when they reported bad quarters and that sort of thing. So what are some of the most important things that companies can do to avoid that kind of negative market reaction?
Yeah, absolutely. Well, two of the things that I always say are like the kiss of death is, don't miss your first quarterly reporting after going public, and don't miss your earnings. So those two things are really important. And it's that preparation leading up to it that is really helpful. So, I mentioned starting roughly, 2 years in advance of an actual transaction to get ready, because that infrastructure takes time to build. And so thinking about, how do I close my books in a timely manner? How do I get some accuracy in my forecasting and budgeting? Can I get through an audit in the time frame, that I need as a public company? And even just thinking about, do I have the right people? There's always gaps to be filled, and sometimes those roles take time to find. And also, just from controls becomes important. Do they have the right technology? Like if a company's still on QuickBooks, that's a pretty good sign that they probably need to do some upgrading. So all those things take time, and that's on top of running the business, growing the platform, and really, building out the model. So I think taking advantage of the time is important. Does that mean you have to start that early? Not necessarily. It depends how mature the organization is and the amount of people they have, because it can be a really heavy lift. So that's where we come in, as we help them. If they don't have the expertise in-house, we can provide that expertise as well as bandwidth to help them along that journey.
That makes sense. This is reminding me, I've noticed that companies come to the IPO game at varying levels of preparedness, and sometimes, I think it's if you're owned by an institution, if you've got a big private equity firm, they're making you do some of this rigorous stuff already, but other guys, that, depending on their ownership structure, maybe very little of that, right?
That's absolutely true. Yeah, I think having some of that structure around, regular reporting, focus on, EBITDA or profitability, some of that gets ingrained when you're private equity owned. I've, on the flip side, seen companies who've never been through an audit before. And so getting used to that rigor and that diligence does take some time. So you see all ends of the spectrum of companies that, have designs on going public and sort of where they are in that journey.
So let's talk just for a second about the things that you can specifically help your clients out with. So we just went through some of the steps that need to be taken, but when Sherry comes in as an advisor, what are some of the things that are most valuable that you can offer?
Yeah, absolutely. I think one of the great first steps for a company to take is a readiness assessment.
Yeah.
And so they can look at sort of everything from reporting to governance to infrastructure around people, process, technology. So that's typically what I recommend to my clients. If they don't know where to start, they don't know where to spend their energies, doing an assessment like that helps them take stock of current state, identify gaps, and really come up with a plan on how to get there. I think that's one of the most important steps. And then really it's around, where are their sort of weaknesses? Do they, have they had trouble closing the books and getting financial statements? Or do they, have they been audited by a Big Four and, they've got that rigor? Maybe it's more around thinking about sort of controls. That's a culture shift for a lot of companies. And so helping them think through, obviously they have time to really comply with the rules post-IPO, but I think starting that journey ahead of time is really important. And then we see things like, do you restructure the legal organization? What are your tax situations? Are you a global entity? Are all those risks covered? So there's a number of areas for companies to think through, but I think that prioritization at the beginning is a really helpful first step.
All right, great. So last question, Sherry. I want you to get out your crystal ball here. Everyone wants to know, when is the IPO market going to reopen, and what's it going to look like? My guess is it won't look exactly like it did a couple years ago in those boom days.
Yeah, I think you're right. I think, probably latter half of 23 is, even still a little bit conservative. I'm hopeful that we will see, some activity pick up. Definitely most of the clients that I'm talking to are saying they're getting ready for a 24 transaction. But really, I think what it's going to take are, some of those bellwether companies that are really strong, really mature, that have a very strong IPO, that's going to start to open the window and make other companies look and say, hey, they did it, I can do it too. And so I think some of those really strong indicators are going to be what it takes to really open things up from my perspective.
All right, great. Well, Sherry, this was really informative. I enjoyed meeting you. Thank you so much for joining us here at the New York Stock Exchange. That was Sherry Majors, Deal Advisory Partner and National Capital Markets Readiness Leader at KPMG. I'm John Generone from IPO Edge, signing off.